back on Morning Trade Live. Expedia opening at a new all-time high this morning after the company beat on earnings and lifted full-year sales guidance. Gross bookings were up 12% year over year and revenue increased 9% in the quarter. Piper Sandler upgrading shares to neutral from underweight off the back of that. So let's just take a look at the board across the sector. So Expedia shares are 17% higher right now. And if we take a look at some of the other travel names, we're seeing a bit of a mixed picture, you could say. So bookings up 0.8%. Airbnb is lower off the back of its earnings report yesterday, which didn't look too bad, down 1.2%. TripAdvisor also tracking lower by 0.7%. So it's a mixed picture across the board off the back of what has largely been a fairly good season as far as some of the travel demand is concerned. So let's go inside out on Expedia and that name and the travel space. Joining us now is Stacy, economic strategist, Scarlet Oak Financial. Thanks so much for joining us, Francis. Happy Friday to you. What were your major takeaways from this report card?
I mean, I just think that it's the business to business growth that was very interesting, because that's not a sector of the economy that's really hurting as far as access to credit and liquidity and all of those benefits. Whereas the lower 60%, the consumer that might be getting tired, and we just got the data out earlier this morning, is not where this growth is. So that tells me that as long as we have a lot of liquidity in the system and the global macro scenario tends to favor this, probably their increase in expectations for the fourth quarter to 6 to 8% are probably valid. And then the other thing that was surprising is they beat Airbnb and Booking.com on rooms, which I think was really interesting. And that was a surprise to investors as well.
Yeah, it certainly paints a bit of a mixed and sort of confusing picture of where we're at as far as discretionary spending and where the consumer, sort of sits in the broad scheme of things, particularly because it's very consistent with what we've heard across the travel space. I mean, the airlines, the cruise lines, even, car booking websites like Avis, for instance. I do see that they talked about the discounts and some of the incentives here. How much of that was driven by that?
Yeah, so some of the other booking companies where that people focus on luxury didn't do as well. And so there's some speculation that's, chasing bulk orders and discounts and the business to business, internal deals and stuff like that were pushing a lot of this growth. And that makes a lot of sense because businesses are still spending at this moment in time. As far as the consumer, I think I heard a statistic on Bloomberg this morning that 25% of America is a subprime borrower. They were talking about whether or not the Fed is going to lower rates, obviously, in December with their lack of data. And would that really affect the subprime borrower? So that is going to end up, there's some reckoning for that part, that part of the consumer and that part of discretionary spending, but it just remains to be seen how systemic that becomes. And so just looking at the technicals here is really interesting. Obviously, new all-time high today, looking to see that it maintains, its October 6th high, which was 240. And that should become support. Looking at today's trading session, there's not a lot of volatility in this trade. There's a lot of certainty in this massive up move based on earnings. And so, this looks like a hold for now.
Okay, yeah, I mean, it's up 40% or so year to date. Certainly the move we're seeing this morning is helping things out there. But even before that, a couple of days ago, it was sort of neck and neck with the S&P 500. So I'm just wondering, what's going to be sort of the next catalyst here, particularly as we are now entering quite a disruptive, sort of challenging environment for travel with the flight delays that we're hearing about with regards to some of the airports due to the government shutdown. Do you believe that that's going to have a material impact on some of the strength we've seen from these companies?
Yeah, it could. I guess today about 3% of the flights have been canceled. So even though that ends up being 700 flights, that's still, percentage wise, it's very low. I'm knocking on wood. I haven't had delays and cancellations in my recent travel, but this is only going to get worse if the government shutdown continues. I have no idea about the gridlock in Washington. I'm not terribly optimistic that we're going to reopen the government, maybe hopefully before the end of the year. But again, I'm speculating like anyone else is. I just think Republicans and Democrats are too far apart right now. Eventually, the longer this goes on, it's going to affect travel. It's also going to remove liquidity from the system. And then to the extent that some of these furloughed employees are not receiving benefits or don't have access to benefits, that could actually ultimately put credit markets at risk. So this is an uncertain time. And anything you're buying right now during this time period should be watched a little bit more closely just because of these global macro risks. But as long as business travel stays high and, they're looking for discounts and internal deals, and Expedia is kind of a one-stop shop for all of that. I do think that this stock, was mispriced, is appropriately priced this morning, and I expect it to remain elevated.
Yeah, and as you point out, I mean, they're trading slightly lower as far as forward earnings are concerned to the rest of their industry peers here as well, which perhaps gives some justification to what you're saying. So thank you so much for that, Frances. Have a great weekend. We'll catch you later. Frances Stacy, economic strategist at Scarlet Oak Financial. Let's trade it now with Tom White, host of Fast Market. Happy Friday to you, Tom, and an example trade for us on Expedia there.
Yeah, maybe not as bullish as your guest was with this example trade. Stock's hitting all-time highs. It's up, 36, 37% so far this year on this massive pop and beat on earnings. So looking to take advantage of maybe some consolidation, maybe a slight pullback. There was short open interest of about 6% in the shares, so maybe that's causing a little bit of a pop here. So I looked at out in the November 21st monthly cycle. So these expire in just 2 weeks. And if you think the stock's going to consolidate, maybe pull back a little bit, this strategy takes advantage of it. But you're still risk defined. So you know exactly what your risk is going in on this trade. Selling the out of the money, slightly out of the money now, 260 strike call, and then buying the 270 strike call. So a short $10 wide neutral to bearish call vertical. You're going to collect roughly, I got about a 270 credit. That's where it was trading earlier. The stock has continued to move higher. So it's trading closer to $4 right now. So you can collect a little bit more option premium, more profitability, and it lowers your risk. But if you collect that 270 credit, that takes your break even up to 262.70 to the upside. That's about 2% above the current share price on this one. So you've got a little bit of a cushion. This is a little bit more aggressive. Maybe you want to adjust your strikes or your option series, but this takes advantage of maybe the move that we're seeing today with the expectations that, okay, it's at all-time highs, it's overbought on a technical level, or maybe you own the shares and this can hedge a portion of your position to the upside. But your break even on that, you got about 55% probability that that short 260 strike will be out of the money at expiration, which is what you want in this type of strategy. You want the stock to consolidate or fall. You still got a little bit of a cushion to that break even. And like I said, you can actually adjust those strikes. Now, if you collect a 380 credit or a 270 credit, the credit you receive is what you can make on that trade. You've got, between $600 and $700 and, $40 worth of risk on a trade like this. So if the stock does continue to move to the upside, that's where you start to get hurt. You're still risk defined, as I mentioned. And these type of strategies, when you've got overbought conditions on a technical basis, maybe make sense. If you own stock, these type of strategies make sense also. But this is a neutral to bearish stance here in Expedia on this massive pop today.
Yep, sitting up 18%. So a bit of a Friday cheer for Expedia off the back of those earnings. Thank you so much for that example trade, Tom White, as always. I'll catch you a little bit later on.